Hey everybody, Ron Phillips here. Today we're going to go over financial statements, and this is step one. Now listen, typically when I say financial statements, people have the reaction that I did when I was in college, and you tune out. Please don't do that. This is incredibly important. It's actually critical to your success. I don't know any millionaire that doesn't understand financial statements and doesn't use financial statements. So it's really important that you understand what we're going to talk about today and in the next video. Okay, so this is step one. What I want you to do is I want you to print out 2 copies of this. And this is called the income statement, okay? And this is the first one. So I want you to print out 2 copies of this. The first one, we're going to go through this and we're going to put actual numbers in so that you know exactly where you stand with respect to a few numbers we're going to talk about today on the income statement, okay? And then the second one is because some of you, for some of you this is going to be a great experience. It's going to be refreshing. For others of you it's going to be kind of painful, probably eye-opening. And the second one is so that you can fix what you see in an error on the first. Okay, it's kind of a goal sheet, and it'll allow you to see what you want to accomplish. All right, and so let's dive into this. And what this is going to do is it's going to allow you to see a few really important numbers. First off, it's going to allow you to see how you're doing on a monthly basis, and second, it's going to allow you to see your debt to income ratio, which I'll explain in just a minute, and also it's going to help us put together a goal for your net worth, for how much money you need to accumulate before you can retire. All right, so those are our goals from this one financial document. Okay, so the first thing is you can see there's a column here called income. All right, what we're going to do is we're going to list all of the income that you have. All right, now on this example you can see that we have a husband and a wife. They're both working. One of them makes $65,000, one of them makes $35,000. You can also see that they don't own any income properties. Okay, so there's a 0 there. But if you own rental properties, not only will you put your income from your jobs here, but you're also going to put your income from your properties here. Any other income you get, child support, alimony, dividend income from stocks, any kind of income that you get, anything that goes into your bank account should go in this column. Then you want to total that up, and if you've done this on an annual basis, then you're going to want to divide by 12 to get a monthly number. If you've done it on a monthly basis, then multiply by 12 and get an annual number. Okay, so we have both of those figures. These people make $100,000 a year. That's about $8,300 a month. Okay. Next, we're going to start to list our expenses, and we're not going to list all of the expenses. All we're going to do is we're going to look at debt expenses. Okay? Now, there's an accountant out there somewhere watching this going, this is not complete. I realize that. This is a simplified version, okay? And so what we're going to do is we're only going to include debt expenses. Okay? So you can see here we have a house payment, and we're going to put our monthly payments on here. Okay, we're not going to put how much we owe on our house or how much we owe on credit cards or cards. We're going to put up here what our monthly payment is. Okay, so monthly payment, if you have a second mortgage, you're going to put that up here. If you have a home equity line of credit, anything that's a debt expense, okay, then you're going to put your credit cards and your car payment. You can list all of your credit cards out if you want to. You can put them all into one. Don't put your balances up here. We're going to use your balances in the next video. Okay, so we want to just put your payments and then add all of those up. Okay, so we have our monthly income and we have our monthly income and we have our monthly expenses. Okay, now we're going to be able to use that information for a couple of different things. The first one is our debt to income ratio. And that's a number that banks use to determine whether or not you're a good credit risk for them to be able to issue a loan. Okay, and it's very simple to figure this out. All you do is you take your expenses and you divide by your income. Okay, so if it's monthly, you're going to divide monthly by monthly. Okay, so in this case, it's 1850 by 8300. When you do that, you're going to get a percentage. You're going to get a decimal point, and then you're going to get a couple of numbers. And in this case, the decimal point, it's 22%. Okay, 0.22, and the numbers were low, so we rounded down. Okay, so it's 0.22 or 22%. That's a pretty healthy number. That means that 22% of your money is going out to debt expenses. Okay, so it's your debt to income ratio. All right, now a healthy one is under 25%, so this is a healthy ratio. You can get a loan up to, I think, they change it all the time, but I think it's somewhere around 40%. May be able to go a little bit higher than that if you're getting a loan for your own home. But for income producing properties, I think they want it to be under 40%, 35 to 40%. Okay. The next number we're going to figure is your net worth goal. This is a really important number because this is where we're going to try to get, all right, with all of our goals. And so with all of the things that we do to hit our goals. All right, and so in the financial world, a lot of industry experts will use the number 4% to be able to generate a good, realistic net worth goal. All right, and the reason they use that is because if you have a number, let's use $2.5 million. If you have $2.5 million set aside, that big of an amount of money, you can almost always get 4% on your money in something that's pretty safe. Okay, and so when you use that, what we do in order to figure out what the big number is, what you do is you take your annual income and you divide that by 4%. So you don't multiply it by 4%, you divide it by 4%. When you do that, in this case, you get $2.5 million. That means if you have $2.5 million and you're getting 4% interest on that money, then it's going to churn out $100,000 every single year for the rest of your life, and you're still going to have $2.5 million. All right? And so that is a fantastic goal for us. If we want to earn $100,000 for the rest of time, if we have $2.5 million, we can do that. Okay? And so that's our goal. And we're going to use this in the next video when we talk about our balance sheet as well. Okay, so really, really important. If you didn't follow through this, just start the video over again, fill your information in. This is really, really important. Again, every millionaire I know does this. He knows it on his business. They know it on their personal. In any business or anything they're going to purchase, they use these financial documents. You've got to know these. This is a fantastic starting point. Listen, the reason this is step one is because we can't put together a plan to get from point A to point B if we don't even know where we're starting. All right, and so this is really, really important. Don't skip this step. Do it. And then once you've done it, make your goal sheet as well. That goal sheet is really important. It shows you where you want to be. Okay, and it shows us where you want to be so we can help you get there. The next video is going to be the second part of the financial statement, and we're going to use some of these numbers that we've, especially this goal number right here, when we go to that next video. So make sure you complete this one. I'll see you in the next video. And listen, if at any point you have any trouble with this or you don't understand something, just give our office a call. We'll help walk you through it, and we'll get you to the next step. See you in the next video.